Coming up on the SBS On The Money podcast, petrol at a 20-week low in Australia. Can Donald Trump really sack the US central bank head? And the US dollar continuing to slide. The details next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Tuesday, the 22nd of April 2025. The Australian share market finished steady today. We'll have the details with Mark Gardner from MPC Markets in a few moments. But first to petrol prices, where it continues to fall. The Australian Institute of Petroleum says the national price for a litre of unleaded nationally fell to a 20-week low of around $1.79 last week. It comes as the global oil price continues to fall amid fears of a global economic slowdown triggered by US import tariffs and more. So where to next? For that, Rhayna Bosch spoke with Vivek Dhar, a commodities analyst at the Commonwealth Bank.
Petrol prices have fallen to a 20-week low, driven by a significant drop in the global oil price. Can you talk us through what's behind this?
Sure. So look, when we saw the US tariffs come about, it really started weighing on just the whole global demand complex, and oil was certainly caught up in that. So we actually saw Brent oil futures really sharply pull lower, below $60 a barrel briefly. And then when we saw the reprieve given to the 60 countries or so, we saw oil come back to about $65 a barrel. So it's been a very volatile ride in terms of what's happened with oil prices. But overall, we have seen a significant reduction so far in prices, and that has really been driven by everything we're seeing coming out of the US and the whole trade war that's playing out.
Yeah, you mentioned oil price volatility there, and obviously we've seen that in other markets as well. Is that something that you're expecting to continue in the near term, and what could affect it?
Sure. So look, there's probably several things to consider in terms of what's coming up with oil prices. I think there's, in terms of where the volatility would come from, I think the first and foremost is let's see what's going to happen with all the sanctions and tariffs so far that has been announced from the US. And I think Iran, Russia, Canadian oil supply, I think all those countries and their production, I think the market is watching very closely. And I think the one that has surprised the market has just been the progress that we've seen so far between US and Iran in terms of conversations about getting to a deal with Iran's nuclear program. Because if that does result in some sanctions relief, we could see Iranian oil barrels stay in the market. And that's a big deal because we were expecting that to be sidelined just purely from the enforcement of US sanctions. And that is one of the big reasons why Brent could balance at about $65 a barrel.
So what does this mean tangibly for motorists then?
Sure. So look, in terms of prices at $65 a barrel for oil, and seeing the currency potentially become weaker, so that's the Aussie, get to about 60 cents, that could see Australian gasoline prices fall to about $1.75. So that's something that we think is very much the risk with oil price, with petrol price direction over the next few months. But really, the skew of the risk is even to further downside to that. In terms of where the volatility could come from on the downside, it is all linked to what OPEC Plus, which is a group of countries that control about 40% of global supply, what they decide to do on oil production. I think what they have done so far indicates that they could be adding more supply than needed, and that could really pull the price of oil down to $60 a barrel. And if that does get realized, it puts $1.65 a litre on the table.
Now, I know you mentioned the Aussie dollar there, and it obviously does hold quite a bit of power, I suppose, in terms of oil prices and, the effects on the market here. If the Aussie stays strong around where it is now, around that 64 US cents mark, what are we looking at in terms of prices at the Bowser?
Sure. So look, if it stays where it is right now, I think we're talking $1.75. I'd say the base case right now would be something in the realm of 170 to 175. But I would say the clearest risk to prices right now for Aussies is that we could see that oil price lower even more, and that could give you more downside to petrol prices.
It's Vivek Dhar there, a commodities analyst from the Commonwealth Bank, speaking with Rhayna Bosch.
Now, Market Day on the SBS On The Money podcast.
The Australian share market now, which ended flat, the S&P ASX 200 down 0.03%, 7,816. Although some companies did particularly well, the Commonwealth Bank up around 4% today. For more on the day's market action, I spoke with Mark Gardner, the CEO of MPC Markets.
Our market generally is a much more conservative market overall, so we will tend to not get hit quite as hard once the dust settles. So obviously the banking sector, the mining sector. Mining sector's already been very, has been hit very hard. So there's really not much downside left. The banking sector's holding it up, but obviously the gold stocks as well. We've got a fairly healthy index allocation to the gold stocks. So most of the damage in the US was done around the Mag 7 and those AI valuations. But obviously there's a lot of money flowing out of the US at the moment after being at record levels of foreign investment.
Speaking of the US, Donald Trump, as usual, in the headlines, stepping up his criticism of Fed Chair Jerome Powell, essentially threatening again to remove him from that position. Can he really do it? And what does the market think?
Look, well, short answer is no, he can't remove Jerome Powell unless there's some form of financial infidelity or improper conduct, essentially, which Jerome Powell definitely has not done. I think what the market's more concerned about is that he's behaving a little bit authoritarian in regards to this. It's designed to be an independent body, and him even threatening to try and remove a chair, the chair of the Federal Reserve, is something that no president has ever successfully done, nor even tabled, to be honest. And it just sort of further deepens people's concerns about Trump's irrational policy and, the plan lacking an actual plan, to be honest. And I think it's just put more fuel on the fire for uncertainty, and markets don't like uncertainty.
The other big move is in the US dollar, continuing to weaken against a basket of global currencies, right? As a result, the Australian dollar's recovered all the losses it made recently since that big fall a couple of weeks ago. What's all of this telling you?
Really, it's a US dollar weakness story. So people are starting to lose a little bit of faith in the US dollar. They've still got that spiraling debt issue, which Trump's managed to keep out of the headlines. But is burgeoning on 37 trillion, growing by $1 trillion every 100 days. It really is the elephant in the room, and the distraction's been, fairly impressive from President Trump, but it's still there. They have to refinance $7 trillion in debt this year, and he's trying to get interest rates down, which is why he's threatening Jerome Powell, etc. But it's less of an Aussie dollar story. Even gold, for instance, is more of a US dollar weakness story than it is a gold story, where people are shifting out of the reserve currency, which is the US dollar, into traditional stores of value like gold. And even Bitcoin's been mildly supported here in a market that would normally be down quite a bit. And obviously Australia, which is regarded as a risk currency, is probably just, seeming like a pretty safe option at the moment because, despite the fact we've got an election, we've at least got two relatively rational heads, potential heads of state, whereas they're not going to start a trade war. So I think it is very much a story of people rethinking the US as the global reserve currency.
And finally, given the volatility that is expected to continue on the markets, right? What are you telling your clients at the moment? And are there any opportunities at all for investors?
Similar to what I've sort of said in the outlook with SBS in the new year, was we were a little bit concerned about de-dollarization. We've been in high levels of cash. There's no shame in taking some profits and being in high levels of cash or having obviously some gold on at the moment, and just waiting for the opportunity that generally these sorts of nervous markets or bear markets where it gets down to being about down 20%, which it did Monday 2 weeks ago. They last around 200 odd days plus, and before we reach a bottom. And one of the big bits of advice is don't get caught in the sucker rally when things calm down over the next month, because I think the knock-on effect of these Trump policies and the lack of confidence will filter through into the economic numbers in the coming months. Like the tariffs will increase inflation, and I think the DOGE job cuts will obviously hurt the unemployment numbers as well. So I think we'll have a second wave down, and sometimes cash is a good thing to be in, and just wait for the opportunities to come to you rather than looking for the opportunities, because there's obviously most famous investor in the world, Warren Buffett. He's in 35% cash at the moment, holding more T-bills than the Treasury is, 380 billion in cash. So sometimes the opportunity is waiting for the opportunity.
That's Mark Gardner there, the CEO of MPC Markets. Don't forget to give this podcast a rating or a review on Apple Podcasts or Spotify if you do enjoy it, and to click subscribe.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.